Consumption names, interesting. But moving on to our next segment, our stock of the day segment, Tata Motors PV is under pressure of GLR facing setbacks from cyber attack and even US tariffs. Joining us is Puneet. Puneet, can you just give us like the entire reason why the stock has actually fallen? Is it just the FY26 guidance cut, or is something more to it?
Well, that is one of the key aspects, but it looks like it will be a tougher turnaround for the counter. And when you likely see the 3 to 4 key reasons, first one's of course that the cyber attacks as well as the US tariff had a big impact on Q2, and subsequently it seems to be having an impact in Q3 as well. The second key point is that Jaguar and Land Rover has actually gone ahead and cut guidance for FY26 on both the EBIT as well as on free cash flow, which was expected to be near zero in this year, will now be in the negative territory. The third key reason is that the management is expecting that impact on JLR business on Q3 in terms of production. And finally, that the India PV business, that's some silver lining in all of this, but it's unlikely to offset the drag that we've seen in the Jaguar and Land Rover business. That's the 4 key reasons. So let me first highlight all 4 of them. The first one being the JLR cut. It was 5 to 7% earlier, has been cut to just 0 to 2%. It's a multi-year low in terms of EBIT margins for Jaguar and Land Rover, while the free cash flow is expected to be an outflow of £2.2 billion. FY25 was the first year where the free cash flow was positive for the whole company as a whole, when the commercial vehicle division was there as well. So this is going to be a key negative for FY26. When you look at the other impact of cyber attacks, the company has come out and quantified this. They mentioned that cyber attack resulted in a loss of about £196 million, and the tariffs impact, which was there in Q1 as well, was a £74 million impound. Now, when you look at the impact of JLR production, 20,000 was the key impact in Q2. We are seeing over 30,000 units that will be impacted in Q3, with the total loss production at 50,000 units. The company sold 4 lakh units in the last year of FY25. So this is a subsequent impact on the business going forward. When you look at the outlook, what they mentioned, they're expecting the PV margins to grow in double digits in the second half of FY26. This will get the PV margins to almost 5%. And we mentioned the guidance for Jaguar and Land Rover, but this won't have the subsequent impact to offset the losses coming from the JLR business. Finally, in terms of brokerages, something like Jefferies is what we've highlighted. They maintained a target price of 300 rupees per share with an underperform rating, and mentioning 2 key points. The first, that they're seeing multiple headwinds for the Jaguar and Land Rover business, including increased competition, as well as what they're seeing in China right now with the increased taxation, and that benefit is now gone. The PV business, as mentioned, is unlikely to see any kind of offset for the JLR drags, and that's largely the reason why the stock is down today. In discovery prices, the PV business did get a higher value, but this is going to be a turnaround story you're going to have to watch for, but wait for a little while for it to actually turn around.
Interesting. The street will be expecting one more turnaround from Tata Motors, and interestingly, if you look at it, almost 70 to 80% of the SOTP valuation comes from JLR. Well, that's pretty interesting on that. Samir, I needed your views on that, especially for Tata Motors passenger vehicles. We have seen largely, you saw kind of a negative impact coming on the earnings. Will this pressure continue more in the coming quarters, or is Tata Motors, PV still not out of the woods yet?
So, to say the stock price is out of the woods, I wouldn't say totally out of the woods, but is the worst for the business probably over, this kind of cyber attack and things? I don't see that repeating multiple times. And if it does, then obviously Tata Motors, the management needs to get its act more in order than they had. So like I said, fundamentally, the worst is already in. We know the losses that are going to happen. To be very honest, I'm a little surprised that the stock reacted even a little bit negatively the way it has, about 5% down today, because we knew, the company had very clearly indicated that production losses were there in the second quarter and they were going to continue, and they were just going to scale up operations in Q3. So this is nothing that the street didn't already know. So a little surprised by that. But yes, given the fact that cash flows are going to be negative, the street doesn't like that at all. It means that you're going to have to raise borrowings because, like you also said, that the bulk of the profitability comes from Jaguar Land Rover, which is now going to be actually losing some money this year. But I think over a period of time, we will see them recoup. The impact that came from the US tax duties is also now going to stop impacting them because the US and UK kind of have a trade deal in place. They know exactly what they're going to have to bear, and they're going to be able to start their exports back to the US, which is a big, sizable, almost one third of the total sales of the for Land Rover. So I think things will start rebounding. Is the stock probably going to go grind a little longer? I think that will probably happen, but I think there is good upside over the next year, year and a half. So for me, I take a contra call and actually go long on a Tata Motors at this point.
The contra call coming in and going long, as Samir has stated, for the company.